Hey guys, it is Friday, August 2nd. Bitcoin is at 61,700. The stock market has dropped 1,200 points in the last 2 days, which it hasn't done that for 2 years. This is not the end of the world, but it is a very meaningful move. And what's even more meaningful is the unemployment rate has increased from 3.5% to 4.3% in the space of 2 months. So the recession looks like it is, we could be getting very close to a recession. And meanwhile, of course, the Fed funds rate has not changed. So this opens the door to the following question. Are we in a similar situation to 2008? I posted a little earlier in the week, I said, is 2024 the new 2008? And I tagged Caitlin Long. And I want to spend this episode on that premise, 2024 versus 2008. So let's take a little bit more of a look at 2008 and see how that kind of played out. So the first thing I'm going to look at is I want to look at first the funds rate, the Fed funds rate in 2008 and versus now. So if you remember in 2007, okay, Fed funds were right where we are now at the midpoint being 5 3/8, okay. So somewhere between 5 1/4 and 5 1/2. So we were at 5 3/8 Fed funds, almost identically the same as we were now, and it for about the same period. If you look, right. So we've had from August 23 till now, till July. So for a year now, we've been just stuck here at 530. And again, from here we were at from July 2006 to July 2007. So we spent 1 year at this plateau, okay? And then look what happened. The Fed funds rate started going down dramatically, right? And in August of 2008, we were sitting here at a little bit above 2%, right? So we're sitting at 2%, and we had already seen jitters of the subprime crisis in 2007. Bernanke came on the record in the mid-2007 saying, hey, this subprime is not likely to contaminate to the full market, Bernanke being the chairman of the Federal Reserve. But they sort of cut rates, and then we hit this air pocket in August of 2008, the election year in which ultimately Obama was elected. And what happened? The Fed funds rate was cut to effectively zero, to 1/16 of a point here by November. So in 3 months, we cut the Fed funds rate from 2% to 1. So we dropped 2%, 2 full points in 3 months. And then we started QE, and we had this massive Lehman crisis, everything, right? So that was this. And then we sort of finally built this interest rate back up in 2015, and we rallied all the way back up, and of course crashed down from COVID, massive injection of liquidity, and now we've just built it up to here. So what's next? Well, we probably should have lowered rates on Wednesday. But, of course, the Fed Reserve decided that they would play it extremely cautious and say, we only want to do it when the data is 100% in our favor. Well, the data just came out, and it is really, it's massively in our favor, in the favor of easing. And, here it is. Here's the U.S. unemployment rate, which started the year off at around the 3.5%, or mid-year last year was 3.5%. Then it goes to 3.75, and all of a sudden has jumped to 4.3% in the last reading. So we've got unemployment now going up quite a bit, and it really feels like a recession now. The bond market is already buying this. The 10-year note is already trading below 4%. So the bond market is completely convinced the Fed is going to cut. The odds of the Fed cutting now in September are almost 100%, and they're likely now to cut 50 basis points, not 25. But the real question is that even going to be enough, right? So the markets right now, the prediction markets are the FedFunds futures are saying there's going to be two cuts to 50%. So we are going to go a whole percent lower than where we are now by November. That's the thing. But that may not be enough. I mean, we could be in a situation where even before the election, right, we are in a sort of economic meltdown. Now, what does that mean for Bitcoin? Well, let's before we get there, let's take a look at what happened to stocks in 2008. Okay, so what happened to stocks in 2008 is this: the Dow Jones. I'm going to look at the Dow Jones, not the S&P, just because it's a better headline type number. Although really, you should look at the S&P. But if you look at the Dow, right, the Dow was down in August of 2008. We're trading about 11,500, right, down from 14,000, and we had this drop in August of about 5%. So we dropped 5% in August, but then the real drop was September, right? September was the massive drop, and we went all the way down. We dropped about 20%, right, to about 9,000 in September. And then we sort of stabilized a little bit in October, November, and then in December, it just went completely down, dropped another 25% before doing a V-shaped bottom at about 7,000, right? And that was in exactly in the inauguration of, it was on sort of February 1st of 2009. So, what do we have? We have very similar situation. We have an election year, right? We had a huge bubble in 2008. The bubble was subprime, right? What is the bubble now? Well, the bubble, there was this notion of an everything bubble, right? But I would say the main real bubble right now is these high growth tech stocks, right? Facebook, Amazon, Apple, Netflix, Google, right? Now, Amazon came out on Wednesday and said, after hours, and said, we're not doing so hot. Apple did okay, but generally speaking, and Intel had a huge miss yesterday, and Intel's lost 1/3 of its market cap. So, and NVIDIA is down quite a bit, right? So there's this huge AI bubble that AI is going to save the world, blah, blah, blah. But a lot of these companies like Microsoft, Google, and Apple are spending a fortune that they cannot sustain on artificial intelligence chips. So we have a bubble that's sort of popping, at least in the short term. And this bubble is very similar to the subprime bubble popping in 2008. A lot of people didn't expect this thing to they expected it to be contained. It's not going to grow. But if this bubble that we're seeing actually starts popping, well, we're kind of in trouble, right? Because we are at a let's time out. We're at a 5%, again, a 5%, we're at a 5% interest rate environment, right? So if we have 5%, no growth, high unemployment, recession, this number is too high for that, right? This number has to go down to somewhere in the 2.5% kind of area. It has to get there fast. But that means that the Fed has to acknowledge that they made a mistake, and they hate doing that. So So this is all bad, right? Now, what is the silver lining? The silver lining is we almost certainly are going to get lower rates, and we're going to get lower rate environment pretty quickly. So I think, the entire world will shift in about 40 days. And I think the new normal will be rates are going down, and they're probably going to go down to 3%. Like, that's the new normal. And in a 3% interest rate environment, a lot of people are going to be like, well, I put all my money in treasuries, and the minute that we sort of calm down on the equity front and the panic period is over, they're going to say, let me put that money to work at a little bit better than 3%, a little bit better than 2.5%. And, Bitcoin's just looking fantastic at that point, right? So I do think all these lower rates are very good for Bitcoin. And the other thing I think that's worth pointing out is these rates are they're good for Trump, right? And the reason I say that is, everybody's interested in kind of the continuing what's working as long as it's working. But if the economy looks like it's in free fall, the Republican ticket looks a little better than what's happening right now. You don't really want higher taxes, income redistribution, a Green New Deal, and all that stuff if the stock market's crashing. People tend to get very selfish very quickly. So, over the last week, it looks like Kamala Harris made some inroads, and it's not completely come back to beat Trump in the prediction markets, but it's getting closer. Definitely has narrowed the gap. Well, that could change with this new economic data. So the bottom line is, I think, the Bidenomics argument that the economy is doing great, and we've managed to create all these new jobs and everything's great, and just keep on vote the existing team in power, I think is a little bit under trouble right now, and it might be under trouble if this narrative continues. And though, while I think it's possible that we go lower short term, I do think it's possible. I think that the reward for sticking this thing out up until and through the election is going to be substantial, right? So I definitely like the odds. Anyways, it was a little longer video, but I hope it was useful. If you're on YouTube, please follow me. I appreciate it. Subscribe, hit the subscribe button. If you're not, if you're on Twitter, thanks again for listening to me. And I will be doing a barbecue next week of my sponsor's beef. That is Shirt Tail Farms beef. I'm going to be testing out their beef online. You can pay for it in Bitcoin and ecological beef. It's going to be great. Anyways, I'll talk to you guys later. Let's see where Bitcoin starts trading, with the weekend and with Monday, which could be Black Monday. You never know. See you then. Bye.